Welcome to the Foundation for the Study of Cycles. My name is Lars, member of the board, and I'm happy to meet you today in our weekly Cycles TV series where we will review market data and analyze current market cycles. Today we will have again a look at the US equity markets to see or update the dominant cycles, the current structure of the dominant cycles, where we are in a long-term and short-term projection. Even though there is no big change ahead, I think it's important that we keep to our current analysis or even update our analysis because there's a very special situation or special period we observe in the global US markets. Therefore, this session is dedicated to the US markets. We will use the S&P and Financial Stress Index for the next 20 minutes to get a clue on what the cycles might tell us for the US markets. That's it for today. Let's get into cycle analysis. For the ones which are new to this channel, what we're doing here is once a week, we want to discuss cycles, or at least I want to showcase current cycles in different markets. So therefore, we use our tool set at the Foundation, Digital Signal Processing Technologies, where we try to get a clue on what cycles are currently active, and then we can use these cycles for different purposes on market forecasting, market analysis, optimizing technical analysis. That's the purpose on learning something on cycles while using current data, not past data, current data. So let's get into it for today. And we need to talk. And as said, the last months have been very, very impressive for the markets, and why I want to talk with you. And the best learning is what happens outside in the markets now. And we have a very, very interesting situation. So therefore, let me first start to repeat just a little bit where we are coming from. And therefore, and I'm just picking sessions which you can review, which we did during October, November, December here on this channel. So therefore, I often get asked, please showcase your profit or whatever, but we are not doing any trading recommendation here, and we are not here to showcase any whatever profitability, but the cycles forecast are important. And in October, let's just the summary here, and the summary is just show on what we did here on the channel, and I would update this analysis here. And in January this year, and this was anyhow out in October, global equity markets have been in a process of topping since late October. Now long-term and short-term cycles have synced up to unleash the next major wave down. This is what we published, and I discussed this here on the channel together with you. Just to recap, and please read it on your own. I showed you the Baltic Dry Index, which showed us the upcoming squeeze in the markets. I showed you the long-term analysis of the weekly Financial Stress Index, which pointed to a low financial stress high at the end of 2021. And last but not least, I showcased the daily cycles in January, and please have a look here. The cycles in January at this point here showed a specific cycle, and I will reveal this cycle again to today, where we are today, which besides the long-term perspective, anyhow, the topping, the short-term perspective projected from January and published here, projected the next bottom mid-March. And you know what happened mid-March? We saw this bounce up here. So where are we now? And just for any one of you who is questioning, do cycles have any predictive value, I think these examples are the best case to learn from. They have been public here in advance, and I would like to review these examples, please, on your own, because these are great learning exercises which we did here in advance. And I mean, do you know where we are today? We had the worst start, of the year since 1939. the worst 4 months, the S&P lost 13%. I think this was seen in this period, the first 3 months of a year. This was last seen in 1939. We never had this period at the beginning of the year for the first 3 or 3 months. The Nasdaq lost almost 20%. This is the worst drop since its birth in 1971. This losing streak. So that's why I said we are in a very important situation if you just review what happened the last 3 months while we put out this forecast here, October, November, January. And I need to stress this because I was hammered to the wall in December because the markets have still running up into the period of November, December. And I had a very bad time these days because I did these forecasts in advance and now you see we had the worst period since the birth of the Nasdaq, and at least at the beginning of the year we saw this in the S&P last time 1939. So what do we learn from this? Let's check if these cycles are still valid, and therefore I would just start with this introduction here to give you a short info. This was the long-term cycles projection from a weekly point of view in October, November last year. And I want to cross-check with you if this is still valid. And we have been, we are now in January. I think we are here. So what happened is we have moved down to here. This is where we are. But you know, the long-term projection here, this period, and this was the projected change in market structure. Yeah, this is what we wanted to make you aware of, October, November. And this period here is not a short-term period. This is a 2 years period. So what we have in front of us and what we have just seen for the first 2 months is just the start of a change in market structure. And I mean, this chart here, and you can review it. I made it public in various publications I discussed here often on this channel. You can review what happened in these red periods where these cycles have been in this time. And I always said the best scenario would be a sideways scenario. Otherwise, you know what happened in these other periods. So, but the first month already told us, no, this will not be a sideways situation. So it just started. And therefore, let's see what can we expect. Are these cycles still valid? And let's drill down to the daily perspective, because it's always interesting to see when we get these bear market rallies, which we might have seen already. But this is what I want to update with you today. So therefore, let's switch to our cycle analysis. Let's start with the long time projection. And therefore, let's use the weekly series first to start with a long-term projection here. So let's use the S&P 500 weekly. That's the chart. I will quickly, as always, go over the standard procedure. If you're a follower, you know how the standard procedure works, but I want to repeat it because we have often new followers here, so that the basic procedure on digital signal analysis should be reviewed. I will always do it very quickly. So this is the current data. We will use, I would recommend to use around 1,000 data points or bars in the time frame you're analyzing for your current cycle analysis if you're doing projections. So for weekly data, this means we will go back until the year of 2006. Yeah, so we will use around 15 years of weekly data for our digital signal processing. And there's the reason not using the full historical data we might have on the S&P, because the reason is if you just use the full history, like going back to 19 something, you could use almost 50 years of data. You will, for sure, you will get a clue on the average cycles in the overall period, which is then possible with digital signal processing. But the result of the average cycles during a very long period often do not give you the best clue if you're just interested what is happening now and you want to make a prediction into the future. So for that case, and this is what we want to discuss here, I always recommend use the current past, not the overall past. And the current past, from the point of digital signal processing, means use a multiply of 3 for the longest cycle period you want to be able to detect. That's the general rule, can be used on any time frame. So the standard setting is that the cycle scanner will look for a largest cycle of around 400 data points. So weekly data means longest cycle 400 weeks, which can be detected here. And if you multiply 300 something 400 by 3, you will get to 1000 plus minus 1200, 900. It's not exactly to the day, but so therefore I would recommend not using more than 900 to 1000 data points, because otherwise you overfit the past data, which always looks good on the past, but the value on forecasting will not be as good as you think, because the principle of variation means that cycles will not be static over time. So if you use too much historical data, you get a good average and past fit, so the overfitting of whatever analysis you do. But in regards to projecting the cycle, you need to know you need to find the current variation of the dominant cycle, which means you need to know the exact cycle length in the current data and the cycle phase in the current data, and not 10, 20, 30 years ago. That's the reason I always recommend to have the standard in-sample analysis of 850 bars, which means 15 years of data if we analyze weekly cycles. So what happens next is we move to the spectrum analysis. The spectrum analysis from the visual point of view, is what you're seeing here down below. In the spectrum chart here, it shows you the peaks. And on the x-axis, there's the cycle length from 0 up to 400. So every cycle length has an amplitude in the spectrum analysis. And if we see large peaks, it means that this cycle length is a valid cycle in the detected data set. And you're looking for the most clean peaks in the spectrum. And in the long-term data set, we have a clear peak here in this data, which is 186 weeks. And the reason I want to bring this to your attention, please just remember now this number, 186 weeks is the dominant cycle. And there's no discussion about this cycle. There is no peak on the left-hand side with this large amplitude on the right-hand side. There is no other green triangle on the left-hand side or right-hand side. So to be honest, there is no discussion if you're a cycle analysis using spectrum. This is the cycle to pick. Yeah, often you see different peaks, maybe beside each other, where there's no clear one peak. This makes then cycle analysis more difficult. But in this case here, no discussion. We can quickly use this cycle, do our prediction here. Besides the length, there's also the phase, which is important. The phase is not seen here in the spectrum, but the phase tells us where we are in regards to this cycle. So are we at the topping point, the low point, or in between something? So besides the length, we also need to know, and this is what the digital signal processing gives us, where we are in the current status of the cycle length of 186 weeks. So therefore, it shows also up in the list here. We can activate this overlay here, and now you see the cycle projection from the longer term picture right on the chart. And just as I said, 186 weeks, and I will now switch back to the analysis we did in October, and you will see here in the upper section there's 3 cycles which have been picked for these analysis, and the one cycle was with a length of 186 weeks. So you can also see the other cycles, but the most dominant cycle, 4 weeks, this is almost 6 months after this analysis from October. We now have May 2022. So 6 months after this analysis, still the same long-term cycle is seen in the data, is very prominent in the data, is shown as dominant cycle. So there's no reason not to follow this cycle here, which means that, and you see, as I told you, we have firstly showcased this cycle here back in October. So October here. At this point in time, I showed you that this cycle shows an upcoming top here. These 4 weeks, that's what I said. I have been nailed to the wall. But now you see how this cycle worked as a magnet to price, yeah? This cycle pulled down the market. It's like a magnet pulling the price down. And this is the beauty, not always, but sometimes, of cycles. And the reason when these cycles worked out, and therefore I just want to remind you of this, it's not just one cycle. And in this analysis here I did, we had an alignment of the weekly dominant cycles of the S&P, the financial stress index. We had the same situation in the Baltic Dry Index, which confirmed this cycle. We had the financial stress index, which also pointed to the major low, and the daily cycles. And all these 4 analyses have come into alignment end of last year. That's the second takeaway. You often see single cycles in one data set, but often this is not enough. You need to see confirmation of at least 1 or 2 related data sets. And this was more or less a perfect alignment of cycles in different data set. And that's the reason I just repeat the situation or the analysis here. You know where we are in this analysis. This cycle has just started. This is a general change in market structure for mid of 2023. So there's no good news around if you are looking for the next bull run. This long-term cycle will not showcase this. It's an overall change in thinking. And if you, or before we move to the daily data, as I said, let's just do the same update in the financial stress index, which I really like, at least if we talk about global US markets here. It's provided by the Federal Reserve Bank of St. Louis. I often use this data set here. I just can highly recommend this analysis. Just quickly repeating the same procedure here. We have one clear peak in the spectrum. This time it's a cycle length of 198 weeks. This data set has a weekly time frame. So just rethink a little bit. 186 weeks in the weekly S&P, which is nominal cycle length of 190 weeks, 198 weeks in the financial stress index, which you could argue is the same nominal cycle length of 190 weeks. So in general, again, in the financial stress index, we also see a cycle with a length of 190 weeks, nominal cycle, exact cycle length in the financial stress 198 weeks. So let's see what the phase of this cycle is. So therefore we can activate this cycle in our spectrum view. And this is what we see here. And what I like in this long-term cycle here is the beauty, how perfect this financial stress index was able just really to detect the major tops and bottoms in financial stress data sets for the past. Yeah, so you see the timing information, and this is why we use cycles for, not for absolute price target projections, at least not the procedure I'm using here. There are other ways to use it, but this procedure is just for timing. This timing information is still valid, or this cycle has not changed. So we are starting a general sentiment shift in financial stress, or we are expecting a general sentiment shift at this point in time, which just has started. Yeah, if you see this period here, this change will move on from the predicted sentiment change until 2023. So we will expect the financial stress to rise until for the next 1.5 years, which corresponds to falling global equity markets. So therefore this cycle is vice versa. But the long-term cycles are still in alignment and give you confirmation on that. So therefore the long-term analysis is still a perfect fit. So now let's switch into the daily cycles to see what the next lower time frame might tell us, or at least is able to tell us. So therefore, we switch now to the daily cycles. This is standard procedure. I would recommend everyone to follow up. Start with a longer time frame. So the weekly time frame might not be your trading time frame or your time frame you're interested in projections, but before switching to your target time frame, and in this case, daily is the target time frame, you need to understand the cycles on a higher level. Yeah, so because they set the stage now where your projection horizon acts. Because if we see now cycles projecting up in our daily time frame, we need to understand that the long-term cycle is still pointing down and otherwise around. So if we see projecting downward cycle in the daily time frame, this is then in alignment with the long-term projection, and therefore you must understand the current status of cycles from the higher time frame. If you have a clear picture, as I said, cycles are not as clear as always, but since end of last year, they are very clear. So let's, same procedure here on the daily chart. Here now, some more peaks might come into play, but at least the starting peak is very clearly visible here with a length of 168 days in that case. Now we are on the daily time frame, so that's the cycle to pick first. 168 is a nominal cycle of 170 days. If you're following this channel or the analysis, you know that the cycle with the length of 170 was visible or is visible for years, for 2 or 3 years in the S&P now. So the daily rhythm, at least which is visible, is the 170-day cycle. During the year of 2021, I have sometimes referred to this cycle because before the end of last year, these cycle repetitions have not been useful in any daily predictions. And if you have seen here on the channel, for example, summer last year, there have been the same cycle length detected in the S&P, but I told you that this daily cycle projections are currently not useful. Because for sure they have not been in alignment with the long-term cycle, and this changed now end of last year, or the otherwise around. You could have used the upswing cycle of this cycle, but now we need to exactly look different at this cycle. But let's have an update on this cycle here. That's the 160 something cycle I showed you in January, which I repeated to the article. This is the January projection we did here, which outlined a possible down in March. This is what came in. We had this exactly mid-March, this slow here, then this bear market bull run here, and now we are back down here to this period. So, but now let's discuss what this upswing might tell us, and that's the interesting point now for today. As I said, the long-term perspective has not changed, but how do we interpret this kind of cycle projection? Because now for the last 2 to 3 weeks, these heavy swings here have been almost impossible to trade on a daily basis with these high volatile markets. But how should we read this cycle? So first of all, the basic reading here is that it shows us at least the period until June, July is expected to be this upturn cycle phase of this cycle here. So, but we know now that this is against a very strong downtrend weekly cycle. We know that this downtrend is very strong because this has been proven from January to March, and this is the left side of this cycle. So this is the left side where we have seen that the downward force came into play as predicted, very strong, in alignment with the weekly cycle. So now we are coming to the right side of this projection here, which switches to the upside, which is against a strong weekly downward projecting cycle. So I would not expect a major reversal in general structure. So maybe I would not think that we will shoot out to new highs here in this uptrend, because the general market structure has changed. I think here the best case scenario is that we will see, if we look back from mid summer this year, that we will see a sideways overall market with very volatile price swings, which might act like this year. So this is if you combine these both cycles, and I would recommend anyhow, please now move to whatever charting platform you use, and then you can fine-tune your technical indicators with the cycle length of 168. Use half of the cycle length, so use 80 to fine-tune now technical indicators. You could also use 40, so use harmonics. So 80, 40 are the numbers to go on your technical indicators. And now maybe to time these swings here, you can use an indicator parameter length of 40 or 80. I would not use 20. So I would start with 80, maybe 40 for fine tuning, and then you can use the standard interpretation of technical indicators. And then the next important point in time, and this is the other special point in time I really would look out for. This is somewhere maybe late June, and I will come to another point how to better fine tune this point in time here. Because at this point in time, we know now from our projections that the long-term cycle and the short-time cycle will get back in sync, both pointing downwards. So I think that the summer and late summer will become a very bad cyclic timing period for the markets, while the next 4 to 6 weeks might be a very volatile sideways situation where you could use technical indicators to pinpoint maybe some swings in the markets, but market will have a hard time to reach new highs. I think we will see some bear market rallies, but that's it. And they are always hard to time. Doesn't matter what methods you use. So maybe I would now look out for the summer to reposition for the next major wave down. I think the best timing point, if we see negative news rushing in late May, early June, this might be then the trigger to set forth the next big swing. I mean, you know how the first swing, it was the most, and this is how I started this session, yeah? The wave we saw now in the first 4 months have been the worst since the start of the markets ever. So we should not underestimate when the next alignment of daily cycles and weekly cycles will come into play. So for sure we should monitor Baltic Dry Index, Financial Stress Index, if they are in alignment, and that's the beauty of cycles within cycles. If they come into alignment, you see how the power will look on financial markets. That's not always the case. In most cases, we have conflicting cycles. That's why in almost most cases, you won't see these clear pictures. As in the Bitcoin or even summer last year, there have not been clear cycles. Until the end of last year, there was no clear outlook for the markets. It just became clearer October, November, December. And that's just what I maybe also want to mention before I'm coming to your questions. I see questions are rushing in. So I will also get back to this now. Often we get asked, so why don't we push up and push out a newsletter on cycles or market forecast? That's not the purpose here. So I think you should not force yourself to see something in cycles. That's also a trap for cycle analysis. You set up your cycle analysis, you open the data set, and you want to see something. You force yourself, you force the analysis to see something. I think in 70 to 80% of the cases, you won't see something. And then you should not force yourself to see something because you need to write a newsletter or you want to bring something out, or it gets boring and you want to trade, or whatever might force you to see something. And that's the hardest way to overcome. Be patient, wait for the situations when you clearly see cycles within cycles alignment. That's then the point to act. But this is maybe 20% of your analysis time. You will see such situation. 80% of the time you will maybe see diverging situations. But if you have seen before a long-term working analysis, you can just stick to it. So the situation we have seen now in October, which is proven coming out, I think this will be stable. So if we see conflicting signals now on the daily time frame, I would not worry about the long-term picture. So just don't do any short-term projections if you're not sure with the short-term projections. So that's why you need to have a long historical view on whatever data set you're interested in. I said that, but okay. But before I just talk, let's stop here. I think the main analysis was done for today. Maybe in the case I repeat myself here, the analysis I've pointed out are very important from a learning perspective. I think markets have proven how they played out, cycles within cycles. We've seen the current market structure. So I told you what the daily cycle analysis now for the next 4 to 8 weeks you need to monitor. And then we will get back to this in summer. So therefore I want to end the session now for this topic, and I will now have a look at your live chat section and we can have a discussion here. So please join the discussion and put your questions in there. So let's go over it now. Where do I start? Okay. Tony, thanks for your comment. Yes, amazing start for the prediction, not for the market, but for the prediction. David Garcia, does the cycle scanner cover other cryptos than Bitcoin? Yes, so that's a good question which we can answer quickly. If you're looking for assets in the crypto area, so you can use the give me a second, I need to open the right chart to show you the documentation where you can see different symbol abbreviations. And for the Nifty, just to go pin, please can you give me the ID of the index for the Nifty? Then I can open it live here in the session. I don't have the ID, maybe on Yahoo Finance, how the Nifty ID looks like. So, but first let's go back to the question, different asset classes for crypto. So here's the documentation. I can make it bigger. So if you want to analyze crypto data sets with the scanner, this is some examples which you can use here. So the important point is use the abbreviation CDS, which is the ID for this data set, crypto data set, CDS. And before you need to put the asset you want to analyze. So you can, Bitcoin is very easy, so use BTC CDS. This is what I'm using here on the channel. But you can also use Ethereum if you use ETH for as abbreviation. You can use Litecoin. You can use also other pairs, like if you want to analyze Bitcoin in euro, not in US dollar, you can use Bitcoin, BTC minus euro minus, and this is then the aggregation of different currencies here. You can even make it more complex here in that case if you want to read the Ethereum price in the Japanese yen from Coinbase. Yeah, so that's the ID you use, and the full ID is then Ethereum. So let's use let's start with this. Let's just open Ethereum. I don't want to get over complicated here. And you could use other symbols for other coins here. So let's just use Ethereum. So here we have daily Ethereum now. So instead of Bitcoin, you can use Ethereum. You can use Litecoin, LTC. And in general, if you want to have completely different asset classes, you can use the abbreviation, which you will find on CryptoCompare. I think we use the same symbols, CryptoCompare. I think that's an exchange which gives you a lot of crypto IDs. So for example, if you want to analyze Luna coin, just use the abbreviation which is shown here on CryptoCompare, which is it Luna? Yeah, yes, it is Luna. So you can go to the cycle scanner and just use this coin, and now you can analyze cycles in this crypto asset class. So, oops, let me just check here. So, David, I hope this helps you a little bit to also analyze different crypto assets. Hello Lars, being crypto is too new for weekly analysis. Which cycle anyway work nice in Bitcoin? Yeah, that's right. So if you want to analyze Bitcoin, crypto assets, we have not enough historical data for weekly analysis. That's correct. Which cycle anyway would work nice in Bitcoin? I think last year I made a longer term analysis on almost any Bitcoin move. And this revealed a nominal cycle with a length of 200 days. So between 180, 220 as the real cycle with allowing the variation. But every main move of Bitcoin was seen by a cycle of a nominal cycle length of 200. So in general, main moves in Bitcoin have been come in alignment with cycles with a 200-day cycle. That's always why I use this cycle as reference reviewing Bitcoin. So that's the answer, John. If you want to start or get a starting point, if you see a daily cycle, use the nominal cycle with 200 or check in the spectrum if this cycle is showing up. Yeah, the Nifty 50, I need to cross-check if the ID is there, so then I will open it. So Dr. Alan Greenberg, yeah, the recordings are in the archive, so please open this webinar link and you will find the recorded webinar link in the webinar announcement. Just a short answer on that. David Garcia, have you studied the 7-year Shemitah cycle or the 4-year presidential cycles? Not in detail. Therefore, I need to invite my colleagues like Andy Pancoli, who's dealing with these seasonal cycles or presidential cycles. They are working with it. So I'm not an expert in these cycles. For sure, I have a view on it, but I would not call myself an expert. So therefore, I don't want to talk on that. There would be other experts on these cycles. So maybe, a special episode of Cycles TV, also bringing up some seasonal cycles and inviting, maybe Andy or other colleagues of the board. Thinking about it. Emma Thomas, Lars, good points today. Thank you. Bitcoin and Spider are correlated. Is by driving the Bitcoin cycle out of phase? I don't think so, or I would be careful with pointing out at least the root cause. I think it looks like they are correlated. I agree, but I don't know if there's a real connection behind both of them. So it anyhow looks like that the Bitcoin cycle, the 200-day cycle, we have a very important weeks, maybe for the next 2 to 3 weeks. Still, we need to see if the 200-day cycle is confirmed or not. So there might be come other cycles in play with Bitcoin. I mean, it is an interesting correlation you're mentioning here, Emma, but I would not think that the, or at least let's analyze it. So why the Bitcoin cycle is getting out of phase, that you're right, but I would not conclude right now that this buy cycle is driving it out of phase. We also need to dedicate a special session on Bitcoin and what happens to the nominal cycle of 200 days. Based on your evaluation, what will be your interpretation for commodities? So you mentioned a weekly set at Antinies. So let's open the data set just shortly. I mean, that's the purpose of the live session, so that you get a chance that I will analyze the data sets you are interested in. That's a weekly data set. Okay, we have the latest data from this weekly data set. I'm just cross-checking, and we have enough historical data. Can you please put in the chat what's this data set, or what's the abbreviation standing for? I just don't have it at hand, just maybe if we want to talk about it. So you're asking for the interpretation on these commodity cycles here. So let's watch the spectrum. As said, not one cycle, which is interesting. We need to watch 3 different cycles, which you see here in the spectrum. So we need to watch the 178-day cycle, the 143-day cycle, and this clear peak here at the 249 weeks cycle. So I would skip the shorter ones here on the left-hand side, but these 3 look quite important. So let's pick these and build a composite cycle here. The 178, the 200, I think the 143 peak here, and the 249, this one here. So that's at least picking, I think it's a good fit. Yeah, if we just cross-check or validate with past timing points, at least here top low, and then this structure of the market. That's what I always recommend to cross-check, kind of zigzag, and then check if the timing of these cycles here are in alignment with the major timings of the markets, which they are, just picking these 3 cycles. Then the next point, I always cross-check before going into the data set, what happens if I deselect one or two of these cycles, because this composite consists of 3 cycles. So I always recommend not look too much into the future. So you're just interested in the current or the next important turning points and how stable these projections are if you now use combinations out of these 3 cycles which have been seen in the spectrum. So let's deactivate one cycle here, the cycle with the length of 143, and just watch how the projection line changes. And to be honest, there's no big change in the projection. Yeah, so therefore you could skip this cycle, because in general the top projection and the low projection here does not change regardless if I use the cycle with a length of 143 or not. So let's now do the same with the 178. You see, this is then more or less a major change, so I would keep this one here. And yeah, in addition, then the long term with the 250 weeks cycle, it's a slight change, but because the top is a little bit changing here and the low is a little bit changing, and don't pay too much attention to the amplitude change. I'm more looking to the timing point change. So and then I draw a little bit some notes on the chart. So the first change might happen here if we just use the one cycle. If we add the cycle, then maybe it's here. So that's the period which we might expect a top with one cycle or using 2 cycles. So that's the point, using 2 cycles and deactivating the, for example, this cycle here. It changes to this point here. So that's the bottoming projection. Yeah. So regardless if you use 1, 2, or 3 cycles, that's the general outlook here. So if you could now completely I need to repaint it here. So that's the topping window, and I think here we had the bottoming window based on the composite cycle model here. So said that, the projection for this commodity you're looking for is, I would say that this is the long-term projection from the weekly cycle. I think similar to the main US markets, here heading down into 2023, 2024, at least the long-term projection. Okay, Antin, yes, I hope this is what you wanted to see. Invesco Commodity Index Tracking Fund. Thank you. So I'm always interested to learn something. So it's a commodity index tracking fund. So thanks. So we just did an analysis on the commodities in general. So that's the long-term cycle. It's just a very quick analysis, but I hope it gives you some idea. I just need to check where we have been. So okay, so the India Nifty was also asked, and I think we have now the abbreviation. Is it right? No, NSEI. I don't. At least at Yahoo Finance, you need to help me out. If we want to analyze it here, please, in the chat. David, I appreciate your cycle swing momentum and cyclic RSI indicators on TradingView. Thank you. So for everyone who wants to dig into the technical component of optimizing technical indicators, sometimes I show it also here. On TradingView, you will find free indicators from me, which use this cyclic information to fine-tune the technical analysis based on this cycle. So the way you can combine it, you will learn the dominant cycles here on this channel, where I want to showcase you the dominant cycles, and you can use this information. Then, for example, to use the indicators, at least the free indicators I provide to you on TradingView, which have a cyclic embedded algorithm, and use this length information here. David, thanks for pointing that out. Dale, Lars, would you please explain again the difference between the composite correlation in sample and the composite correlation visible range, and how to best use it? Okay, thanks for your question, Dale, because that's also important. Your question is related to these two numbers here in the upper left corner of the cycle model builder. And use it here on this analysis. I think we have the commodities fund, which a long-term weekly perspective, and the left-hand correlation. So first, it's a correlation score between the price and the cycle composite, which you have selected here. So it's a basic correlation score from a mathematical point of view. So it goes between 0 with very low correlation up to 1 very high correlation. The color coding is everything above 50 or 0.5 is green. Everything below is yellow. So green is a very good correlation. Yellow is a bad correlation. So in sample means it shows you the full correlation of your selected in sample period. So, and if you want to make this visible, this is the full correlation from starting point of the left-hand side, so where the dark blue period starts, up to the right-hand side, where the last data point is used. So this is the full in-sample range compared to the composite cycle here. And this number won't change if you scroll forth and back. So we see, and you see it also visually, it has a very nice fit correlation score of almost 70% over the whole in-sample period is a very high correlation score. So there's now a second score on the right-hand side, which you see it changes while I'm choosing a different visual perspective here, so that and you see the number switches, but it only makes sense I need to cross-check a little bit. So if you, Yeah, it's just the visible range. So it's the correlation from the visible range from left to right. So if you just want to see the correlation in a special range, you can zoom in and you see the correlation here in this area is 0.58. So, or you can maybe look for I mean, this is in general. You see, maybe if we use only this period here, yeah, it's the correlation is not as good, because here we had this sideways moves while we had this pointing down, pointing up. And here we had maybe a positive correlation, but this sideways raw data has not a good positive correlation. So here the right hand side is just amber. So if you zoom into different periods, for example, it's not enough data, so you need to select enough data, otherwise it will not show up. And you just see the visible range, which builds then the correlation. So you can zoom into the data set while the overall correlation will not change. Hope this helps a little bit to explain these two numbers. And the second part of your question was related how to use them. I would not pay too much attention to the correlation score, because it's a correlation between price movement and the cycle. So the correlation also takes into account the correlation for the absolute price movement. As I said, the cycle analysis we're doing here is mainly focusing on the time component of the data, not on the price correlation and the absolute price movement of the composite. Therefore, it looks good if the price is also in correlation with the composite, which in this case is a good example. But often the correlation score might be low because the absolute price values are out of range from the predicted absolute swings of the composite. However, the timing might be perfect, and therefore you might see a bad correlation score. However, the timing information was spot on. And that's where you have, or that's where you need to focus on while you look at the composite score. If it's a good score, then you know always it's a good fit because of price and time. If the correlation score is bad, it might just be because the price was off, but maybe the timing was okay. And this will not be seen if you just look at the mathematical number of the correlation. That's as a comment also on the composite correlation. Happy motoring Tesla weekly. Tesla weekly. Yeah. Tesla weekly. Let me check, or let me give an upfront comment. I always would be careful in analyzing individual stocks. And I think often you won't see me doing this here on this channel, because I think individual stocks are mainly also the result of, from a digital signal processing, we call it noise, or one-time movements based on news, manipulation, just Elon Musk smoking a joint in a feed channel on social media, which, to be honest, from digital signal processing is just noise. But if this noise ratio is as high as it will overrule the general cycles in this data set, then we will have hard times to detect the right cycles, and the engine will not be able to detect the right cycles if the noise factor, like smoking too often something in social media, might be a too high noise level for digital signal processing. Please forgive maybe for this explanation, but you mentioned Tesla. And you often see this kind of behavior in individual stocks. So therefore, the best data set you can use is where it combines different stocks, like the indices or funds, or even then drill down, for example, in the electric vehicle fund area. I think you will have also subgroups in the S&P or the tech index for electric vehicle assets. this would be a better entry point than just analyzing the Tesla stock. Otherwise, if you are interested in understanding cycles in Tesla, maybe there's also analyzing sentiment score on Elon Musk. That's just a short idea. If you find related data sets on sentiment information for the asset you're looking in, so and also recommend the same idea for Bitcoin. So look out for related sentiment data sets which you could use. And I know that there's a lot of individual sentiment data out there. Like I think you can follow, you could analyze the sentiment of tweets of Elon Musk, which would allow you to analyze the cycles of the owner of Tesla. And if there is a cycle in this data set, this could give you a clue when he will show up on the next social media stream with smoking things. And this will be then the point where you expect the Tesla stock to drop next. Please excuse for these maybe off-note talk, but at least to make it interesting. I mean, just looking at Tesla is very simple. We just can open it here in the chart, and happy motoring for sure. Let's do that. And please forgive my off-topic comments on this data set. So here we have the weekly Tesla stock market. So anyhow, also another comment which I need to make here is that we have a very strong upward trending data set. Even if we use the log scale. They're just using the 700 or using the weekly data which we have on Tesla. Might not be enough, because in general we just have a very strong uptrending data here. So for the digital signal processing, the weekly data will just more or less look like a straight line up. And even if you detrend this data, maybe I think there is this cycle then if you detrend it. Yeah, so that's anyhow, by the way, that's how the cycle detection works. First it will detrend the data. So if you detrend this data, this is then the cyclic behavior which will then be there, and that's then where we will see the cycle. So, but just as an additional explanation, the basic procedure for sure, yeah, and that's exactly the result which I would expect it. We have a plateau. We have a plateau and a very long cycle here if we use just the long-term data, which is more a long upsloping line. So I think we cannot get any clue out of the weekly data set, because from a weekly perspective, we have just an uptrending data set with a long-term cycle, but we don't have enough repetitions of this cycle to show up. So it's a good learning example here. So let me explain what I'm trying to talk about. So the detrended data, just in general, the detrend, let's even make it bigger to explain it a little bit better here. So let's make this a little bit larger. So this is the weekly Tesla data. If we detrend, or if you would detrend this data set, it will look like drawing a line. Or it's not drawing a line, but just a simple way of detrending. It's this upsloping line here. And then we just get the cyclic component, which a cycle analyzer will analyze here. And just in general, I think the cyclic component, let me pick a different color here. The cyclic component here is looking like this cycle, then moving up and down around this long-term trend. And you see the whole data is just seeing from here's the top, here's the top, here's the low, and here's the low. So just from very briefly, without any digital signal processing, this is the length of this weekly cycle here from top to top. Yeah, or even from low to low. But that's the reason you can't see it in the spectrum. We just have one repetition. Yeah, it's just one cycle length. So as I said, to be able to detect this kind of cycle length, we need to have, at least from a possible point of view, 3 repetitions in the data set. Otherwise, it won't show up in the spectrum. Yeah, so that's the reason. Maybe there is this cycle here, but we just see the plateau here because there are not enough repetitions to detect where is the exact cycle length here at the tapping point. So that's the reason we can't use weekly data. I think you should go then to daily data on Tesla, which could work, but I think for today we're running already over an hour. I won't do it now. Mike, it would be nice if the app would be visible, a title at the instrument being analyzed. Yeah, so for example, the DBC would have a title, Invesco Commodity Index Tracking Fund. I agree with you. We have not put too much attention to bring this a name on top, but I have heard this several times now, and it's on the to-do list in the next releases. We will show also the name here somewhere, that you don't only see it in the abbreviation here in the upper right, so that also the name can be looked up. This will come with one of the next information. So now we have the Nifty, the Indian stock market here. So I promised if I get the ID, I will also get an idea with it. And now we have it. So that's the Indian stock market. I just want to cross check if we have actual data. Yes, we have. So that's the daily view. Okay, looks good. We have these 900 bars in sample. That's just a quick cross check before I will dive to the spectrum. And let's see here, we have one clear peak with a good battle score, 161 days cycling. But then we need to pay attention also to this second top here in the spectrum with a length of 229. Because it is a clear peak in the spectrum. However, the battle score is low. It's showing up as a red triangle, which means we don't, from a statistical point of view, we can't see valid repetitions in the overall data set. In general, if we had more time, I would now extend the historical analysis to see if the battle's value gets higher if we add more data. So we should go more into the past where we have data. So you just change the in-sample start point somewhere in the past, so to have more historical data, but only to see if this peak in this range here still shows up and we get a higher battle score. This would give us confirmation that maybe in the shorter range we are currently analyzing, the battle score gets low. It's anyhow a long cycle length. So a cycle with a length of 230 in just 3 to 4 years of data allows these 3 to 5 repetitions at maximum, which is okay. But we need to have longer period to cross-validate. I can't do this now, but let's have a view at these two cycles. So 160, first one, I would recommend here, and that's maybe a good example. So even it's a longer learning session, but we talked about the correlation score some minutes ago, and you see here that the correlation based on price and time is not as good. So 0.5, even below. It's a very, very low correlation score in general, but that's because that's what I said. The swings of the cycle are not in alignment with the absolute price swings, but we also need to cross-validate if the timing information, if also is as bad or is as good. So therefore, let's and a visual confirmation is always helping here in that sense. So therefore, I just extend a little bit the visible range. And then let's just check here's the top, and then from here to here we have the low, and here the top exactly here, and here the low in the markets, and here is an high. So that's here. So then we have a low. That's more or less a sideways period here. Not perfect, but then we have the top here. And we have the low here, which is then also sideways move here. Then we have this topping window here, and then down this here, and this now projects the next swing here. So as you see from the timing information of this cycle, the correlation just with the timing information is very good. And that's only what you see, or if you can see, when you do this kind of zigzag connections between price and then just compare the timing offsets of this data, which is not the mathematical correlation score. And therefore, as you see, if you just overlay it, it does not look really good in correlation. But if you just extract the timing information, it could be used here. So now I would zoom into a better short-term view, but let's add also the other cycle with 229 here, because that's this. And again, here you see that's an important point to make. Even though I said the Bartlett score is very low, so I'm not quite sure, at least in the short analysis, if I would use it or not. As I said, let's use more historical data to confirm or to decline using this cycle. But if I just switch between the two cycles, so composite out of two cycles, 161, 229, or even if I just skip the longer term cycle and just please watch what happens to the composite, on the projection area here on the right side, if I just change between these two. Because if you look at the composite, that's what I said, never pay too much attention into the very long-term future. Just look at the next projected 1 or 2 turning points. And these turning points from a timing perspective, again, they don't really change. So just using one cycle, the top starts here. Using both cycles, the top shows us here. So it's really not a big difference. So that's the topping period just using 1 or 2 cycles of this data set, as switching here. So forget the amplitude change. So the projection for the Nifty would be, we have some room to go into June, and then the next downswing follows. And then I would recommend do the same procedure with weekly data to see if this is in alignment with the longer term market view, and maybe also check some sentiment, financial stress for the Indian stock market. I'm not sure which sentiment data could be used, but this I would recommend before following just a simple cycle, also cross-validate with other sentiment data for the Indian stock markets. Okay. So very long session today. We are running over an hour. So first, excuse for this long-term session today. However, I like these kind of sessions because I think the first 20 minutes are for someone who's just interested and give me some facts and figures about the current market cycles. That's what the first 20 minutes are about. And the other session is then open to the community, what you want to discuss. And I'm promised to stay here at my desk, at least trying to answer all your questions, because this is a learning channel, education channel. And I hope your questions and the answers I tried to bring across help you in getting better with cycle analysis. That's the purpose we are trying to push forward here as Foundation. And I'm very happy for your contributions today. So do me a favor, join the next session. Next week will be a pre-recorded one because I'm on business travel next week, but the week after will be live again. I will indicate this in the stream headline, so you can always have a cross-check in the headline before you join the stream. Is it a pre-recorded session? Then you will see the title and topic, and you will also see if it's live. Next Monday, as said, I need to do a pre-recording on the weekend. I will do it close before the session, so we will still have live data. And then I hope you join me again in 2 weeks for the next live session to discuss whatever shows up, whatever is interesting, whatever is happening in the markets. We will have a view on cycles. Thanks for today. Have a nice week. Stay safe, and let's meet together in some weeks. Bye.